Hey traders, welcome to Charts and Coffee. Hope everyone is having a good morning. We're taking a look at what's going on in the broader averages here this morning. If you have any questions, feel free to type them in. First come, first serve. And we'll take a look at what you got your eye on as well. I'm going to always start, and by the way, if you take a look at the notes on the left side of the screen, you'll see as I prepare for the morning, every morning is really two styles of trading in the Sector Secrets Mastery. We kick off the morning with kind of a recap of open trades. I send out a recap of our current trades and the price at which I've bought the options or the shares. We send that out every evening. We do a quick review of those open positions. If we're near a target, we'll discuss it. If we need to manage risk on the open, we'll discuss it. And then we shift gears into looking at day trading. The first hour of the day has historically been the best time to day trade for me, right? Everyone's got different times of the day that might be best for them, but I've largely found the old saying to be true. Amateurs open the market, professionals close it. So the question is, do you want to go toe-to-toe with the amateurs or do you want to go toe-to-toe with the professionals? I'd rather go toe-to-toe with the amateurs, right? So in the morning, I've got those clearing range setups. I've got initial balance levels I can look at. And it just seems to be, for me, a better time. And I've found that's usually true for most traders, that first hour of the day presents some of the best opportunity. All right, then we move on to the second half of the morning, and that's going to be the swing trades. And now I'm looking at 1 hour time frames, daily time frames, as opposed to the 5-minute day trades. And now I'm looking for swing trades. Now I'm looking for things that we could keep overnight from, say, on average 2 to 10 days, maybe longer. And the idea there is, are there trends? Are there pullbacks in that trend? And how can I manage risk to the target? And that's the most important thing, gang. How do we manage risk to the target? And underneath that question is, how much risk do we have to the target? And that's probably a question that's not asked enough and therefore sadly not answered enough. And that is, am I risking, let's say we bought an option for $1. Am I risking the entire dollar to get to the target? And what's the target represent? Is it at least $1 of gain? If I'm going to risk $1, I should at least expect at minimum to make $1, if not more, right? $1.50, $2. That becomes a 1 to 1.5 or 1 to 2 risk to reward, right? If I'm risking $1, again, max debit or 100%, am I taking 20% off the table? Am I willing to take 20 cents of a profit and close a trade out? That's an untenable approach, because that means one loss is going to wipe out potentially 5 wins. And that's where traders play the chutes and ladders game with their P&L, right? Rather than consistent growth, which is always what we're looking for in the Sector Secrets Mastery, whether that be day trading, whether that be swing trading, whether that be the longer position portfolio sessions we have. We're not looking for home runs. We're looking for that consistent growth. And if you find your P&L is doing the chutes and ladders thing, the first thing to ask is, what is my risk to the target, right? What am I willing to risk? And what does my initial target represent in terms of reward? And if that's upside down, which sadly it probably is for most traders, how do we right that ship? So little things to think about. All right. So with that being said, let's go ahead and take a look at the NAS here. So yesterday's CPI is kind of a big deal. Why was that? Well, first of all, gang, let's acknowledge that the only two downtrends in the broader averages are the Dow and the Russell. So to talk about the Dow and the Russell in the same way that we would talk about, say, the NASDAQ and the S&P is just a basic error in differentiating that all the indices are not doing the same thing. Some of them, due to their sector weightings, due to their stock weightings, are weaker than others. And right now, the Russell and the Dow are the weakest. Then we take a look at the S&P and NAS, both of which have been moving lower, but both of which are in chop. I would consider the NASDAQ to be the strongest of the four indices. It's in neutral to slightly bullish chop, while the S&P is in neutral to slightly bearish chop. So you might say, Rog, what's the difference? The difference is bearish chop is likely going to have lower highs in the chop and lower lows, while bullish chop is likely to be better supported. So that means if I'm differentiating now, just really getting granular, trade this, not that, then I start saying, all right, maybe it makes sense to be a little bit more bullish in the NAS. And a couple of the Magnificent Sevens, I think 3 or 4 of them, are looking pretty darn good, right? So those are things to keep in mind. Yesterday's CPI basically reminded the traders and investors that the Federal Reserve has still been cutting rates, right? They're still cutting rates, or just, the abruptness of Powell's messaging on the 18th. And he's done this before, and I guess he clearly doesn't mind upending the market from time to time, but the abruptness of that messaging was really where most of that weakness kicked in. What do I mean abruptness? There are lots of Federal Reserve members, and they do lots of talking. And there was very little up until the 18th to prepare the broader averages for a shift in messaging, and therefore eventually monetary policy. That CPI reminded us that the Federal Reserve is not quite done. There's at least 1, if not 2 more quarter point cuts priced in for the remainder of this year. And then that's really going to be it. So yes, in fairness to Powell, the bulk of the cuts are done, but it was really the abruptness of the messaging. So it's not time to be bearish quite yet. It's just selectively bullish, selectively bearish. We never want to paint the broader averages, or really the market in general, with a brush, right? We don't want to say everything's bearish. It's seldom the case. Everything's bullish. That's seldom the case, right? So it's always about watch list building, finding the strongest stocks to buy the dip in, finding the weakest stocks to sell the rip in. And I'd far prefer to buy the dip. Uptrends are far easier to trade than downtrends. Believe me, listen to me now, believe me later. There are very few traders that do better in downtrends that do better in uptrends. Okay. All right. So with that being said, the first question here is JR's asking about LUV. No, I can't trade LUV but based on what you're saying, you're looking for a time horizon of 1 to 3 days. I'd have to be bearish on that time horizon. So if I'm going to do anything at all with LUV, I'd have to be bearish. Now, LUV is in an interesting sector. It's in jets. And the other reason I would say thanks, but no thanks to LUV is when I look at the group it belongs to, the JETS ETF, I'd rather be long. I'd rather find something that's climbing along with that tide, if you will. So AAL, ALGT, ALK would be where my watch list would start, not necessarily JetBlue or Love or Expedia, things like that. So this is just for me the nuance of watch list building. A single stock really is a conversation about what sector does it belong to and what sectors does that index belong to, whether I'm day trading or whether I'm swing trading. So, but all my cards on the table, I'm long jets. So clearly I'm definitely not looking at, I do like this group, but I don't specifically like LUV, but I definitely like the group. So JR, thank you for the question. All right, next up is a question on Tesla. All right, so let's do this. Let's kind of stick with this notion of the sector and the index. I mean, the NASDAQ's the strongest index, and Tesla is part of the NASDAQ. It's not only weighted in the index, but it's weighted in a sector that's heavily weighted in the index, and that's the XLY ETF. This one's had a tough go since mid-December. So if I'm going to single out TSLA, and TSLA would be the way I would set up TSLL. So the question is, what is this one? I would say this is mostly bullish, right? I would say this is mostly bullish. And TSLL is a great, Jazz. I agree with you. TSLL is a fantastic alternative to the really spendy TSLA option. So I'd rather have more TSLL calls than one or two TSLAs. They're going to move together, but I have the ability to scale in and scale out. So well played. As far as being long, beautiful. Frankly, as long as the yellow candles are dominant, the red candle did have a little bit of a showing there on the second. But for the most part, when you look at the color of the candles, just say look back a month, mid-December to mid-Jan, you'll notice that most of the candles are green. One is red, the remainder of yellow. I would call this bullish chop. Bullish chop means, yeah, I'd rather be long calls. And so the only thing I would say on this one is, do you see how he hit that 426, almost 427 level, which is where that Darvis is? This Darvis was established, with the highs that you can see there. That's a level that I would proactively want to take profit at, move to break even. So this is definitely something you could keep on the bullish watch list. But remember, just be cautious, because we're certainly not in a trending environment. Tesla's not in a trending environment. The broader averages are not trending. So that just simply means that I'm going to be a little bit more vigilant about paying myself when I can, not when I have to. But love what you're doing there with that one. Yeah. All right. So let's see. Jawan asks about Tesla and Amazon. So since we covered Tesla, let's take a look at Amazon. Amazon is kind of in that same situation Tesla's in, quite literally, because it's part of the XLY. But, it's not a no, right? It's not a no. I don't like that red candle. I'm not going to ever buy as a swing entry a red candle. I would say perhaps, Jawan, focus on the 1 hour, right? And if I went back to Tesla and instead of the daily, looked at the 1 hour, I think both of those might be great short-term swings, where instead of setting up the daily for a long-term swing, I would set up the 1 hour for a short-term swing. Two things change. This is what we do in the Sector Secrets Mastery. One, I don't need to buy as much time, which is part of the expense. And two, my time horizon is shorter. So I'm much more aware of, getting out at a target in a little bit more active way. All right. So thanks for the question. What are my thoughts on GC? All right. Now take a look at GC. GC's waking up, isn't it? D. Bolton. GC's waking up. Green candles, bullish momentum. I'd be a little cautious, mainly because you can see we've had resistance around 2753, then again up at 2800. I'd be a little cautious. I certainly don't want to buy into a higher high. That is never going to be what I'm looking for. But as far as green candle meets the gray zone, not bad. Not bad. At least it's neutral. The green candles, the gray zone is support. That's volatility calculated support. Wouldn't be against that at all. Yeah, wouldn't have a problem with that at all. And again, if you switch gears to the 1 hour, take a look at the chart to the left of the daily there. If you shift gears to the 1 hour, that might be a better way to go. Shorten the time frame, shorten the time horizon, be a little bit more active about where we could get a pullback to. In fact, unlike the daily, the 1 hour is in an uptrend. And I do not use multiple time frame confirmation, gang. I look at the 1 hour for the slice of psychology that it represents, and I look at the daily for the slice of psychology it represents. They don't have to agree. Right. And they honestly won't always agree, especially in a choppy environment. So let's be frank. Right. We're here to pick not only the best symbols to trade, but we're here also to pick the best time frames to trade them on. So you ask yourself, do I want to be a day trader, a short-term swing trader, a longer-term swing trader, or something we've been talking about more often in the Sector Secrets Mastery? When there's so much confusion and uncertainty, on the daily, it's amazing if you look at the weekly how intact some of those trends are. All right, Morgan Stanley. I'd be a little cautious with some of the bank stocks right now, Munir, because of earnings. So this is a stock that has earnings this morning. So I'm going to leave it be. I mean, that's an easy decision. Wait till earnings and the volatility around that settle down. This week has been a lot of financial stocks earnings. A lot of stocks within the XLF have released earnings. I'm definitely not going to trade something day of earnings, at soonest maybe day after. So that one just goes on the watch list of let's just wait for the earnings reaction to play out, and then I'll revisit what kind of structure it has and what kind of setup might be there. All right. Question here: what is my favorite time frame for day trades? The 5 minute. The 5 minute. All right. So let's go take a look at some of the sectors we just mentioned, financials, and let's do this. Let's kind of go back to this conversation about Morgan. All right. So what I do is let's do it this way. Morgan financials belong to primarily the Dow. Would it surprise anybody here to know that the Dow is weighted mostly with financials? If you've been listening to Charts and Coffee, or if you're a member of the Sector Secrets Master, that's not a surprise at all. The number one weighted sector in the Dow Industrial Average are financials, followed by tech. Right? Industrials and transports are really relegated to lower weighting. That's just the nature of this beast. Now, that said, the Dow is heavy. So think of it this way. How much harder, how much more effort are financial stocks going to have to exert to overcome the heaviness of the index it belongs to? And my experience is a lot more. So I'm going to be a lot more hesitant about long positions in a group like this. Not a single one of these is in a trend. However, certain ones look better than others. So I would not trade anything with a red momentum or red trend. I would not trade any of these that have red candles as pretty recently. So MS, even though it's green today, we know it's green as it's going into earnings. So it's going to have to prove that it's bullish when it's been predominantly bearish a little bit more. Same thing goes with Goldman. Same thing goes with Wells Fargo. Same thing goes with American Express. JP Morgan's probably a little bit more convincingly bullish, as is Citi. So my bullish watch list of the high concentration weighted names in the financials limited right now to two symbols, Citi and JP Morgan. And the further to the left I could push those red bearish candles and see more neutral yellow and green bullish, the better, right? So one green, it might snap a bit of a downtrend. It might snap that bearishness, but to really say the bullishness has traction, I'm going to need a few more days to make sure that's true. Now, while there's a lot of concern, fear, uncertainty, they all create the same thing, more selling pressure. Usually, one of the things we look at sometimes are defensives. Defensives really aren't shining right now. Let's not presume that defensive stocks, dividend yielding stocks, are always going to benefit when there's weakness in the equity markets or in the broader equity markets, in the averages, I should say, NASDAQ, S&P, Dow, Russell. Or here's another way of thinking about this. I've been very hesitatingly bearish. One of the reasons I'm very hesitatingly bearish is all the places that should benefit from flow, from buying, from support. If we're truly in a bearish environment, if there's truly more fear than optimism or greed, is staples should do better. Utilities should do better, and they're not. So it makes me wonder, money never goes under the mattress, gang. It doesn't just sit on the sidelines, on the bench, right? It's going to go somewhere. That's the world we live in. And, when I say money, I don't mean all the money. We don't en masse go to cash, right? It's a ludicrous notion to say that regardless of the cost basis, all of a sudden everyone goes to cash. It's if you think about it, when folks say, on television, we're in cash. Well, shouldn't it matter what your cost basis is? If you've got Amazon or Apple from some great cost basis, why would you go to cash? Shouldn't you be able to withstand some of the volatility? So I think that's always this ridiculous notion that everyone just went flat and is sitting in cash, especially in a longer term portfolio. I did that once in my entire career, and it was the dumbest thing I ever did. I'll never do it again, and that was in 08. I'll never do that again. Dumbest thing I ever did. It just goes to show a lot of the stuff that they talk about in television isn't real and intelligent tactical thinking. So that said, if staples are not benefiting and utilities aren't benefiting and real estate's not benefiting, meaning moving higher, the money's going somewhere. And if it's not going to defensives, and I don't see it going into a lot of aristocrat or dividend yielding stocks, which are primarily in those groups, hence they're such defensive sectors, then they're probably still, in a little bit of hopium mode, maybe, or optimistic mode, right? And we will probably see some flow into tech or other more risk appetite like sectors. So keep that in mind, because even the downtrends in the market, in the stock market, will tell us something about the uptrend. So I would generally avoid this. April, to your question, yeah, I would generally avoid this. What are my thoughts? It's bearish. Yeah, it's really simple. It's a bearish stock in a bearish sector, and in a sector that quite frankly, even with the concern, uncertainty, right, it's still not benefiting from a bid. All right, gang, as always, if you have any questions, get them in early. We'll be back here tomorrow for Charts and Coffee, same time, same station. Be good to each other. I'll talk with you soon.